get match fit. Go and speak to a financial advisor.
I think as well that there's a lot of misinformation out there as well, isn't there, for buyers?
I'm optimistic about the future. I think this is a time of the dust settling.
The best time to buy a property was yesterday.
I think it's going to be a great time when the markets correct themselves.
Hello and welcome to Shared Ownership Unpacked. I'm Joe Bartlett, the home buyer coach, and I'm joined by Rob Horn from Southern Housing.
Hi Joe, pleased to be here. And in today's episode, we're talking the property market, what's next for first-time buyers. We're going to be unpacking all of that and how does shared ownership really fit into it all. We're joined today by our New Homes Market Insight Manager from Southern Housing, John Wade. Welcome, John.
Thank you. Thanks, Rob. Thanks, Joe. Great to meet you. And thanks for inviting me along.
Are you a little nervous about today's episode?
Of course I am.
Yeah?
I'm not used to being interviewed.
Do not be nervous. I think you're going to be an absolute natural.
Thank you.
Your name was one of the first that came up when we were spitballing ideas of people to be on the show. So
I'm sure it was.
We're excited to have you with us today, Joan. If you could just start off by telling us a little bit about your background, your history in housing, but also anything else you want to share about your winding career so far.
It's definitely winding. That's a good description. Well, I've been in housing on and off for 20 odd years now. So when I started, it was a lot of shared equity and a thing called DISO, which was buying shared ownership on the open market. So you could buy second-hand property.
Oh,
so
really?
Changed a lot. So I've seen a lot of things, and I think we're in a really good place. So it's it's been an interesting journey. I've worked in sales and marketing. I worked producing an equity loan scheme a few years ago as well, which led to called My Choice Home Buy a few years ago, which has led to further equity loan schemes. So, I've been looking at what the customers can afford, what behaviours through the years, and that's kind of led me to this role now, where I'm very interested in the data and ensuring that Southern are really building and producing products for the right customers, for the people who are looking for a home.
I feel like I'm going to hang on every single word John says today.
Yeah, same. I'm there.
I just think we might be here forever.
I got the job.
Definitely.
Do you know what? There's one thing you mentioned there, which I don't think we've covered, which is you mentioned one of the first roles, which was having kind of shared ownership for any property. I don't think we've addressed the fact that shared ownership is specifically for shared ownership properties.
Yeah,
it's not a scheme it's not a scheme you can use on any property. It is very specific property. So it's very interesting to know that there was a scheme previously that allowed you to do it on any kind of property.
Well, it was very popular. It was interesting, but I think one of the benefits of it being tied to a new build is we're creating sustainable homes now.
Yeah,
we're creating homes that are cheaper to run, more efficient, whereas you're tying yourselves to Victorian properties that may have issues with damp and things like that. I think it works very well with the tenure.
Yeah. Well, I think that's the way they're going with things like landlords now, isn't it? The buy-to-let kind of market, they're making sure properties are, energy efficient. So, that's just the way things are going, isn't it?
Yeah.
Well, I suppose we better get started with Rob's favourite segment, the Quack Attack.
Quack Attack. So, John, the premise of Quack Attack, it's named after Quaxley. And basically, we're going to give you 20 seconds to answer quite a open-ended, big question, property-themed, obviously.
Excellent.
And you'll have 20 seconds to try and fill as much information into that, and then we'll kind of unpack it a little bit afterwards. Does that sound all right?
Yeah.
It's no pressure.
Start the beeper.
A little bit of pressure. In 20 seconds, sum up why shared ownership is an important option in today's housing market. Go.
Well, Rob, we live in a time of very expensive properties, high rents, and shared ownership is an ideal tenure. And I say tenure, it's like buying or renting. It's an option for buyers, and it's an option for people who can't afford to buy on their own, or they struggling to pay rents and looking for something more stable. Is that too?
That's 20 seconds.
I'll still have to start again.
No, that's fine.
That was good.
That's good. We're just interrupting you because you've hit your 20-second mark, so we
I
can
could
just
talk forever.
Let's, as the name suggests, let's unpack it a little bit more.
Yeah, let's. So, John, where do you see the property market heading in the next kind of 12 to 24 months, would you say?
Well, Joe, I'm not psychic, but I look at what I see in terms of inflation, house price, I think we've had a very tricky last 24 months, 36 months, with some interesting decisions by government, things happening in the world, tankers getting stuck in canals, all kinds of things that have ruined the global market. And really, I'm optimistic about the future. I think this is a time of the dust settling. Everybody wants the dust to settle. The government, people, we want inflation rate to ease, to stay calm. Even house prices, I think, will stay calm as a result. I don't think there's going to be huge hikes in the market, and I think interest rates will stay fairly stable. People are saying they're going to reduce maybe 0.5% in the later part of the year. It's been pushed back a bit because of higher inflation, but generally, dust settling time. I think it's going to be a great time when the markets correct themselves after a pretty bumpy and very strange, actually, when you look at the property market, very strange 15, 17 years in terms of very low interest rates.
Absolutely. Well, you mentioned interest rates. Obviously, at the moment, it seems like interest rates are high because we were used to kind of the 1% and 2% on mortgage interest rates. Obviously, if you zoom out, that really isn't the case. I mean, they are higher now, but would you say that shared ownership is a good option for a higher interest rate kind of market?
Yeah. No, I think you hit the nail on the head there, Joe. Is maybe we're not as used to these higher interest, to say in inverted commas. But I think the challenge is when pre-2007, the 2008 crash, interest rates were always between 3.5%-6% in the early 2000s, but the prices weren't so high. So you've got a mix there.
It's a balance, isn't it?
It's getting the balance right, and actually some drops is really helping that. And this is where shared ownership just sits perfectly. I think it's become more and more as a relevant tenure, as a relevant way of buying or renting, whatever way you look at it. It's providing a home.
Absolutely. What would you say first-time buyers should be doing to get ready, even if they're not quite there yet? How should they prepare?
I think it's a marathon. It's not a sprint. Buying property, unless you're very lucky and everything aligns. And with a marathon, you have to train. I think, Rob, you run a bit, so you'd understand this. But
never done a marathon, but I get the analogy. Half a marathon,
or even a half marathon. You can't turn up on the day.
Yeah,
and I think that's it. Is find out what your situation is. Look at some property. Think maybe that's where I would like to live, and go through an assessment. And then you can learn if it's not one, it may not work for you, but if it does work for you, if you can start to work out where the steps are to get to that place.
Whenever I've done kind of, social media posts about shared ownership, a large number of the comments are, I'm never going to own a house. It's just not going to happen for me. I rent, 15, 16, 1700 pounds a month. Can't save, can't do anything. So that's, that is the mindset. And those people, or a lot of those people, probably are in a better position than they think they are in terms of affordability.
Yeah, definitely.
It's just about, getting the information first.
Yeah.
Awesome. Perfect. Would you say that more people are turning to shared ownership now, with increasing house prices? Is it a bit more of a viable option?
I think it's certainly younger people. I think more open to new ideas. I mean, what's interesting is people go conventional way of buying property. Well, mortgages weren't conventional not so long ago. Not in our lifetime, but still, they've only become prevalent really in the last 50 years.
Yeah.
So why so unconventional? So I think younger people are more adapted to it. Sometimes you have interesting conversations with parents because it's the unknown, and when you're trying to protect your family, which of course you want to do, it's difficult not to pick up on the negativity that you see in the press. But I think young people are really starting to see. I think there's a lot of work to be done, but they're starting to see that we could actually have a home.
I think as well that there's a lot of misinformation out there as well, isn't there, for buyers? They speak to their parents who haven't bought. They've been in the same house for the last 30 years. Haven't bought in such a long time. They're trying to give advice to their children.
Oh yeah,
and
definitely.
It's completely outdated.
Yeah.
And that's a big factor. That can be off-putting for potential buyers if they're not getting the right information.
100%.
Yeah. And I think it comes from a good place, doesn't it?
It does. It does.
People want to look after their children, especially if they're providing some help with the deposit, they want to make sure that it goes the right way.
Yeah.
But I think also there has to be a realism by those parents as well, that maybe they don't have the 200 grand, 100 grand deposit to give their children.
Yeah,
So
yeah.
what are the options?
What are the options?
And this is a sustainable way of planning your future and living. It's a home rather than a rent, where you don't always know your landlords. You don't know what's going to happen next year. You don't know what the hikes are going to be. Whereas if you plan within a shared ownership, even with, we'll probably touch on this later, things like service charges changing over time, you can still plan for those things. Whereas you don't know whether your landlord's going to suddenly say, oh, I'm going to hike it by 10% next year.
Absolutely.
Yeah, definitely.
While we're on the subject of parents helping out their children, with the next generation, what role do you see shared ownership playing with them?
Well, I think deposits are going to probably diminish over time. A lot of these, we've got the baby boom generation who've done very well out of the some have done very well out of the property market, and that's been passed on. There's going to be less and less of that because, again, I'm not psychic, but I foresee that we're not going to get the property hikes. I know people in the industry like to sell that because it's an industry and they want to build on it, but I think it's going to flatten more, unless you're in a regeneration area. But most areas now, the hikes are not going to be what they were.
Yeah.
So you're not going to get that available money to pass on to your children. That will diminish, and you don't need those big deposits and shared ownership, so it becomes more relevant going forward.
Yeah, absolutely. So the younger generation are going to be looking for things like, schemes, shared ownership to get onto the property
100%.
ladder, aren't they?
Yeah, definitely. So we've kind of touched upon this already. We've sort of gone into potential like myths around shared ownership, particularly from kind of mums and dads offering that advice and not really knowing what the advice is. And I think it's a perfect segue into our next segment of the podcast, which is all about like busting some of these myths. So in this section, John, we've got a small video of some clips that we took at the last London Home Show.
Okay.
And in these video clips, people are sharing their actual worst piece of advice that they've had.
Great. Sounds interesting.
Right, so let's start with the first clip of our people at the London Home Show.
What's the most ridiculous advice somebody's given you about trying to get on the property ladder?
I don't know.
Cancel my Netflix? Never. I'll do it when I'm dead.
Cancelling her Netflix. That'll solve all our problems.
We've heard that one before, haven't we?
If only life was so easy. That's it. Just your Netflix account.
There is, though, some element of truth there. So although just cancelling a Netflix subscription isn't going to be enough to save a deposit, if you look at all of your outgoings, so you look at your Netflix subscriptions, you look at your nights out, you look at your takeaways, you look at everything, and then you can save, say it's £400 a month, put that into something like a lifetime ISA, within a couple of years with the bonus, that genuinely could be a deposit.
Yeah.
Yeah.
But
especially for shared ownership.
Yeah, I mean, definitely. But, I mean, cancelling my Netflix?
No, I know. What a ridiculous concept. I mean, cancel everything else but the Netflix.
That's
Yeah.
it. Maybe just have a subscription cap. That's
Yeah.
your limit,
Yeah.
isn't it? And keep that Netflix.
Right, let's have a look at the next one then.
So I actually got advised by a bank to either buy a lottery ticket or go and have a child and come back, and they would double my allowance, the loan they could give me. So she actually said, go off, buy a lottery ticket. You have more chance of winning the lottery than you do of us giving you a loan.
That is,
What?
Shocking.
I mean, do you think it was that kind of like Broker's Last Day or something? And they were like, it doesn't
maybe
matter.
they just won the lottery. Not
Yeah,
before.
maybe. Yeah.
It
It
worked
worked
for
for me.
I just from a bank as well.
What was the other bit about having a child as well?
Yeah, I'm not sure how that even factors in.
I mean,
Having a child is
maybe
not,
have
it's
a
not
child,
actually
you're
good
out-
for your finances.
Yeah.
So take it from me.
Yeah, your outgoings will go up and we'll give you more.
Yeah,
No, that
like, I
doesn't
don't
work.
really understand. I mean, to be fair, while we're on that subject, it is important to know that if your income isn't made up, purely of salary or purely of self-employed income, if you do have elements of benefit income, which you would have if you had children, so things like you might have maintenance payments, you might have child benefit, you might have, various other incomes, some of that can be actually used towards the affordability assessment. So in that way, having a child potentially could help, depending on the amounts you're getting in.
Yeah.
But I don't think
You
it was
need a bigger
spent in that
property
way.
though.
Yeah, then you-
to accommodate your child. I
Yeah.
mean, I think that highlights why shared ownership is needed, because they've just said that massive jump. Oh well, you're not earning enough, so you'll never own.
Yeah, that's not.
Shared ownership maybe is that bit in the middle where
Yeah.
if you save a little bit of time, if you save a bit, or your income's going to rise, or there are steps to getting there, not
Yeah.
just no, go home.
But I think she also mentioned that it was, she went to the bank.
Yeah.
So the bank's only going to be able to ever tell you what that bank's able to offer.
Yeah, it makes a big difference.
So it shows the importance of speaking to, an actual mortgage broker who can properly assess your situation, put a plan in place, rather than just rely on what your own bank's telling you.
Yeah, right. Let's dive in to the next one. I mean, goodness knows what we're going to get next, to be honest, based on that. Right.
Well, a lot of people say don't go share ownership.
Oh yeah.
A lot of people say go outside of London.
Yeah.
You can get much more affordable for a house. A lot of people said, oh, the price is going to change now after June.
Yeah.
Consider that. So yeah, not very good advice.
Really
to be fair.
worry about the service charge because we have no control over that.
Yeah.
So we need to be really aware and yeah.
That was a bit scattergun, wasn't
There
it?
was
There
quite a
million
lot
and one
of
reasons why not to.
Different things in there, wasn't there? I think I had moving out of London. I think I had service charges. There was quite a few things. There were more reasons why with that the service charge, but it's more of a reason why you can't buy. Not necessarily bad advice.
Yeah. I mean,
moving out of London, I think potentially for some could be quite good advice.
yeah. I did this. I did the same. I sort of moved into I didn't move out of London necessarily, but I moved into a more affordable area at the time. So both times I've bought homes, I've bought in a more affordable area and then commuted to my job or my wife's job. So
Yeah.
it's not a bad piece of advice. that,
No,
but
I think
I
more
think
people are
sometimes
doing it.
You have to move to get the thing that you want. So maybe shared ownership, you could afford one bed in a certain area, but you want a 2-bed. You
Yeah.
need a 2-bed, so you move to that other area. That makes perfect sense.
Yeah, and I mean, it highlights what you're saying, like how much information. That's almost the bad advice she's had is just too much.
Yeah, information
negative
overload, isn't
overload,
it? And it's
yeah.
all negative.
Yeah.
yeah.
You remember the negative stuff. Unfortunately,
Yeah.
that's the way we
Of
work,
course.
isn't it?
Yeah,
You
yeah,
do.
yeah.
Did I hear somewhere in there she mentioned something about waiting to buy until June as well?
Yeah.
How does that make sense?
I think this is sometimes this comes from a place of there's always a better time, isn't there? And I think
Yeah.
in property, and it's a lot to do in the media. You see the BBC, it's constantly, this month it's gone down, this month it's gone down, this has gone up. And it's just, you need to look at the bigger picture sometimes. Like, for example, we were just looking at property prices, and over the last couple of months, there's been some drops here and there. But actually, you look over the year and it's gone up.
Yeah.
So you can get stuck in the minutiae of it, but there's always a reason not to. I think the answer is, does it work? Does it work for you financially? Does it make sense for you? And you look at the numbers that work for you.
Yeah, I think I heard somewhere the best time to buy a property was yesterday. And it's so, because that's kind of how it works, isn't
Yeah.
it? Really, it's difficult to pinpoint an exact date in the future to think, oh, that's going to be the best time for me to buy, because a number of things can happen. It doesn't really work like that. If you are ready to do it and you find the right thing and it's affordable and it ticks your boxes, why not go for it?
Yeah, definitely.
Yeah.
Cool. Right. Should we move on to the next one?
Buying coffee.
Yeah, or live at home so you can save up for a deposit. That's the only way you're going to be able to afford it.
Like
but
my family
not
is
everyone
in
wants to live
Essex.
not everyone wants to live at home, so it's not always that easy, is it?
She doesn't want to live in Essex, clearly.
Yeah, not for her.
I mean, again, there's an element of good advice in there about kind of, moving back home, but it's not for everyone. It doesn't work for everyone. Not everyone has even got that as an option.
Absolutely not. Yeah, and for some it can feel like a big step backwards. But for those that do get on with family, and can kind of put their pride to one side a little bit, if you're saving over £1,000 a month, that's a big amount.
Yeah.
Yeah.
If we're talking a 5% deposit on a 25% share of a property, £5,000, something like that, in 5 months, 6 months, you're pretty much
there.
there.
Yeah.
You know, we're not
It's a
saying you
good
have
end
to
goal, isn't
move
it?
back home for the next 10 years. It can be quite a short-term thing. Wait until your tenancy expires, move back there for a few months, save, and then readjust and, see what you can do.
Yeah, and if it's a rocky road with your parents, and you'll be even more excited when you move into your
Exactly.
Yeah,
Even
absolutely,
more of an
yeah.
incentive to be
Oh,
like,
God,
right,
yeah.
I'm not going out tonight because
Yeah.
I'm moving. I'm moving.
Unless you
like-
want to escape the parents every night, so you end up spending
Yeah,
more
maybe,
time.
There's always a downside.
Well, I don't know. Maybe just get a good lock on the room. Just
Yeah.
lock yourself in there.
I think it is good advice, but again, it comes down. It's generic advice again, isn't it?
It
It doesn't
is.
work for everybody.
Yeah.
And it's like, do what you can, but sometimes I suppose we all should keep an eye on our spending. And sometimes I've looked at my account and I'm like, oh, I've spent 50 quid on coffees this month. Maybe I could rein that in. There's something you can do. So I know where it's coming from.
Yeah,
Yeah.
definitely.
No,
But
definitely.
Rob, you mentioned, not everyone has that option.
Yeah.
It might not necessarily be, I don't want to because I don't really get on with them. But some people don't have that option at all, So,
Yeah, I
although it's good advice for some, it's definitely not for everyone. So sadly, we now need to move on to the final part of the podcast, which is the nest egg. So, John, what is your nest egg, your one crucial bit of advice for first-time buyers?
Goes back to what we were saying, get match fit, go and speak to a financial advisor, look what's out there. And it's important to what works for you and focus on your needs, yourself. I've got some statistics here that 76% of buyers, shared ownership at 23, 24 were first-time buyers. So that was their first big decision. And also 65% were under the age of 39. So it's showing that it's catering for that kind of younger market. But also there's still 35% as well there of older buyers. There's buyers that are downsizing. They see it as an option, a sustainable option for their retirement. So it's what works for you and find out what your situation is. Does it work now? Or perhaps it will work in the future or very soon, and how do you get there?
Yeah, that preparation, definitely.
Yeah. I guess like picking up on that, you're also saying like there's hope.
Hugely positive. I go to some of these developments and think, wow, I'd love to live here. We've got development in Hackney coming up, and it's a fantastic opportunity to live somewhere like that. And again, we touched on we all hang our hats on the negativities in the press because we remember it and the media put that out. But actually, there's a lot of positive things. We've gone through some really difficult times. We're making it through. And now we instead of looking at the bigger picture all the time, we need to look at our picture. And the opportunities are out there.
Absolutely.
I think that's like a nice key summary of
It
today's
is.
episode. Like it's all about,
Yeah.
finding the positive things that work for you.
Yeah, I mean, one of my takeaways was going to be, there's no perfect time. It's when it's right for you.
Yeah,
There's
definitely.
no deadline that you need to buy by. Just you were saying there, a certain amount of, was it 35% or over the age of 39?
Yeah.
There's no deadline. When it's right for you, will be the right time.
It's still as much of an achievement to buy your first home or, buy a share in your first home at 50 as it is at 25.
Yeah, absolutely.
It's still something that you should be really proud of yourself for doing. Like it's not an easy thing to do in some of the market that you face. So
Yeah, and if you live in, some ways that we live, we need that more transient tenure of rent sometimes in our lives as well, and that might take us up to 65 because it suits the way that we live. It's about what works for you. I'm not saying shared ownership works for everybody, but it will probably work, unless you're rolling around in lots of money, it probably at some point will be relevant to you.
Yeah,
it's just
definitely.
figuring out when.
perfect.
Brilliant.
Some really lovely key takeaways from today's episode.
Yeah, it's a good one.
I think we could, again, it's one of these ones we could be sat here for a long time, John. You've given us some really good insight. It's clear to see that you're someone that, is constantly looking at the data, constantly looking at the numbers, crunching them and really understanding like where's the market going.
It's always comfort in numbers.
For you, maybe. I'm not sure it's the same for me. I'm probably more comfortable sat here doing this podcast, but maybe not. That's another debate. But I think, it's been a pleasure to have you here, and
It's been a pleasure. Thank you.
we hope you've enjoyed yourself.
Very much, yeah.
Thank you so much for joining us. And If you'd like to listen to more episodes of Shared Ownership Unpacked, please head to wherever you get your podcasts. That's it for today.